Where is the world's smart money heading right now? Look at this chart. In a massive geopolitical earthquake, Canada has just overtaken China, surging to become the #2 destination for global foreign direct investment in 2026. This isn't just a statistical anomaly, it is the ultimate proof of a massive capital shift. We often think of Canada as America's quiet, peaceful neighbor. But if you look beneath the surface through a geopolitical lens, a completely different, massive reality emerges. The world's fourth largest oil producer, the largest holder of uranium and critical minerals essential for the AI era, a strategic powerhouse bordering 3 major oceans. Now Canada is rejecting its passive role as America's backyard and has actively begun to wield its overwhelming resource hegemony, exporting energy directly to Asia to maximize its national wealth, kicking out Chinese mining investments under the banner of national security, and selectively choosing the military technology of middle powers to defend its own territory. Canada is no longer just following along, it is the architect. Today we go beyond simple trade diversification to track the master plan of this architect Canada, which is quietly leading a new global order. And we reveal the ultimate portfolio, tracking the core assets expanding within this national awakening. The first weapon in Canada's awakening is energy sovereignty. For decades, despite extracting massive amounts of crude oil, Canada was forced to surrender its energy to Texas refiners at a massive discount, known as the WCS discount, simply because its pipelines only went south to the United States. It was a tragic structural flaw that drained billions of dollars from the Canadian economy every single year. But with the Trans Mountain Expansion Pipeline, or TMX, cutting straight to the Pacific, the game has completely flipped. Stretching over 1,100 kilometers, this massive infrastructure now moves nearly 900,000 barrels of oil a day to the West Coast. And the timing couldn't be more perfect. With the Middle East constantly on the brink of conflict and the Red Sea shipping lanes under severe threat, Asian manufacturing giants are desperately seeking stable, conflict-free energy sources. Canada now exports its energy directly to these massive Asian demand centers, like South Korea and Japan, through the port of Vancouver, and it is getting a premium. The billions of dollars in margins that used to line American pockets are now pouring directly into energy companies on Canadian soil. There is a way to capture this massive explosion of national wealth directly in your portfolio. It is the iShares Core S and P/TSX Capped Energy ETF, ticker symbol XEG, listed on the Toronto Stock Exchange. This ETF heavily concentrates on Canada's national energy giants, like Suncor and Canadian Natural Resources, escaping America's energy control network, getting fair value on the global market and generating independent cash flows. This is the purest investment solution to bet on the explosive growth of Canada's energy infrastructure. Canada's second weapon is the backbone of future technology, core resources. The entire world is obsessed with the AI supercycle, driving up the stock prices of Nvidia and Microsoft. But there is a critical bottleneck. There is simply not enough power to run these massive AI data centers 24/7. Solar and wind power cannot handle this load. The only answer to this power grid dilemma is nuclear energy. We are already seeing this panic unfold in real time. Amazon recently purchased a nuclear-powered data center, and Microsoft is actively trying to revive dormant nuclear plants. Big tech is realizing they cannot rely on the traditional, fragile power grid. They need massive baseload power that runs continuously without carbon emissions. And at the absolute top of this global nuclear ecosystem, holding the reins, is Canada. The Athabasca Basin in Saskatchewan, Canada, is the world's richest repository of high-grade uranium. Furthermore, with the United States officially banning the import of Russian-enriched uranium, a massive supply shock has hit the global market. American big tech companies must now bow their heads and go to Canada's uranium giant Cameco to keep their AI running. Wall Street's capital is moving beyond just tech stocks, heading straight for the dominant players in this raw material ecosystem. The Global X Uranium ETF, ticker symbol URA, listed on the New York Stock Exchange, is the key to riding Canada's overwhelming uranium hegemony. Holding the true bottleneck of the AI industry, Canada's strategic assets have been elevated to a mandatory holding in global investment portfolios, exporting massive energy directly to Asia and seizing uranium hegemony in the AI era. But even this massive resource empire has one fatal weakness. It lacks the population and indigenous hardware technology needed to defend its vast territory and run its advanced industries. The highly respected British publication, The Economist, recently raised a sharp and provocative question: why Canada should join the EU? The logic behind their answer is crystal clear. Europe needs space and resources. Canada needs people. Let's deal. This profound insight applies not only to Europe, but with chilling accuracy to middle powers in Asia, like South Korea and Japan. Advanced manufacturing powerhouses desperately need stable energy and minerals, trapped by the weaponization of resources by Russia and China. Meanwhile, Canada desperately needs the three-ocean defense capabilities and infrastructure technology to protect its massive wealth. A perfect match of massive supply and demand. This is the true nature of the Middle Power Alliance, championed by Canadian Prime Minister Mark Carney at the Davos Forum. Canada is no longer a passive nation begging for security by blindly buying American weapons. Faced with a historic $43 billion, or 60 trillion won, project to acquire next-generation submarines and completely overhaul its armored forces, Canada excluded the United States. Why? Because as global warming melts the Arctic ice, new shipping routes are opening up, bringing Russian and Chinese naval threats directly to Canada's northern doorstep. Canada urgently needs a formidable fleet of conventional, diesel-electric submarines capable of long-endurance patrols under the ice. The United States, which only builds nuclear submarines, is entirely useless for this specific mission. Instead, wielding its massive resources as a weapon, it is handpicking world-class defense powerhouses like Germany and South Korea as its true partners. Specifically, South Korea's KSS-III submarines, equipped with cutting-edge air-independent propulsion technology, have emerged as the strongest candidate to secure Canada's Pacific and Arctic fronts. Canada provides its territory and resources, and the middle powers provide the cutting-edge weapons to defend Canada's oceans and land. Standing against a unipolar system centered on the US, Canada is taking the baton, orchestrating a historic geopolitical grand deal to design a completely independent security and resource bloc. Through its geopolitical pivot, Canada has stepped out of America's shadow and is reborn as the master of the global supply chain. Beyond being a simple safe haven, it is the explosion of oil money flowing through the TMX Pipeline and the uranium hegemony that will rule the AI era. And, as The Economist prophesied, the massive exchange of population and resources. Wall Street's smart money is already quietly riding on this new ecosystem created by Architect Canada, decoding the massive shift of capital beneath the surface. This is the Kairos Global Macro Report. We will see you next time with our sharpest insights. Subscribe and turn on notifications to follow the flow of wealth.